Good morning. My name is Masana Chauke. I am your CFM 22B2 tutor. And today's tutorial session will be on Unit 2, which is your job costing. So before we start with today's work, I hope you guys can see my screen. And I'll just go through short theory. So with job costing, unique products are produced as per customer specification. So with job costing, we don't produce large quantities of products. It's just one product, a unique product for a specific customer, sorry. Yes, okay. And then to get your total cost for a job, also known as your total manufacturing cost, we add our direct material plus direct labor, and in this case, applied manufacturing overhead. And as you remember how we then get our applied, is that we first have to calculate our POR. Information is usually given on the basis that we're supposed to use. We'll see with today's activity what basis we'll be using to calculate our manufacturing overhead. And then this assigns cost to products where the specific job is completed as per customer specification. Okay, and it's also important to know whether a job has been completed or is incomplete. I'll explain later when we're doing the activity. And then all costs are entered onto a job order cost card. So that's where we basically record all the costs incurred, right? Okay, and then to calculate your applied manufacturing overhead, we first have to calculate our POR, like I had mentioned earlier. And how we then find our POR is that we'll take our budgeted manufacturing overhead over our budgeted basis. So it can be direct material, direct labor, machine hours, labor hours, but the question always specifies. And then after finding our POR, we'll multiply it with our actual basis. Okay, so today's question is question 5, which is Creative Designs Ltd. Okay, so I always advise my students to go through the required so that they know, so they know what to look out for in the question. Okay, let's just highlight. Okay, so A says that we must prepare a job cost card for customer Ndlovu, okay. B says prepare the work in progress account for customer Murphy's job, and then D says determine the over or under applied manufacturing overhead costs. Okay, so let's go back to the question. Okay, so it says that Creative Designs Ltd makes wrought iron and steel balustrades, fences, security gates, and burglar bars. All are custom design. So this custom design is also important because remember I told you that with job costing, it's unique products as per customer specification. So obviously something that is custom design means that is customer specified, basically, right? So custom designs for their clients, right? Okay. The following information is available in respect of 2 customers. Okay, so here we were told that there's 2 customers, which is Murphy and Ndlovu. And I don't know if you remember from the required, we're told to prepare a job cost card for Ndlovu and a work in progress account for Murphy. So these are the 2 customers that we have for August. Okay, the month is also important as we do it monthly and not yearly, right? So this was the first month of the business, right? Okay, so Creative Designs completed, very important, as I said, completed customer Murphy's job during August. So nothing here has been said about customer Ndlovu's job, but here we know that customer Murphy's job it's completed, sorry. Okay, so it says that material to the value of 42,600 was purchased in August. During August, 16,950 worth of direct material was issued to customer Murphy's job. So basically what this is telling us is that 16,000 Okay, so the 42,600 is the total cost that was incurred in material. And then here, sorry, we're told that 16,950 worth of direct material was issued to customer Murphy's job, right? So it means that the remainder, which is 17,960 to customer Ndlovu's job, right? Okay, indirect material to the value of 4,360. Okay, also important. Was issued to production. Okay, the summary of the payroll. So payroll, remember, it has to do with payment. For August, shows that Creative Designs Limited worked 249 hours on customer Murphy's job. Okay, and then 273 hours on customer Ndlovu's order. Okay, so these are the actual hours incurred in each customer's order, right? So, and then it says here, the indirect labor cost amounted to 2,800 for the month, right? Okay, the labor recovery rate, also important, is applied at 50 rands per hour. So in this case, we weren't given the total cost for labor, but we're given the number of hours worked on each job and also the labor recovery rates. So remember, to get the total labor cost, we'll use the labor recovery rates times the actual hours. Okay. So with going through the question, I'm basically just answering some of the questions that might be asked or required to be answered. So our manufacturing overhead costs, okay, are absorbed, right, on a direct labor hour basis. So it means here, since we're given that direct labor hour basis will be used, this is what we'll use to calculate our POR, sorry. Yes. Okay, and then it says that the budgeted, also important, budgeted manufacturing overhead cost was estimated budget, right, at 324,000 per annum, right? And remember, I had told you that here we're calculating per month. So basically what we'd have to do here is we'd have to find the amount per month. So we take this amount and divide it by 12 months, okay? With a normal capacity of 600 labor hours per month, okay? Okay, the over or under applied manufacturing overhead cost is charged against the cost of goods sold at the end of each month, okay? And here it further says that the following additional manufacturing overhead costs were debited to the manufacturing overhead control account, right? So remember that your manufacturing cost is an expense account. So when we debit something on that account, it means that our expenses increase, whereas when we credit, our expenses decrease. So look at that later. So we're given that there's electricity and water at 9,500. Then there's depreciation of equipment at 5,200, and then we have rent of factory premises for 5,000. So remember, here we're told what's this? Accounts that go under manufacturing overheads are anything that is incurred for the factory. So here we're told that the rent is for the factory premises, right? Sometimes they'll give us rent that also includes non-manufacturing costs. But in this case, we're told that this rent is specifically for the factory premises. Okay, so going back to our required, A says that we must prepare the job cost card for customer Ndlovu. Okay, so let's go to Excel. So basically, this is then how your job cost card framework is or formats, right? So we have our opening balance, and under opening balance, we have our we have our direct material, direct labor, as well as our applied, right? And from the from the question, we weren't told anything about any cost brought forward or opening balances. So in this case, our cost for direct material, direct labor, and applied manufacturing overheads would be a 0 because no cost were brought forward, right? And then giving us a total of 0 rands for our opening balance. And then for our current costs, we still have the same headings under, which is the direct labor plus your direct material plus your applied manufacturing overheads. So for current, right? So remember, this is for custom and global. So we look for direct materials for custom and global, and here we're told that 17,360 for was the value for the direct material. So then here we will record 17,360 for direct material. And then for direct labor, since we weren't given the total labor costs, we'll look for the hours and then multiply it with the labor recovery rate. So for custom and global, 273 hours were spent on his order. So take that 273 times the 50 rand, which is the labor recovery rate, which will then give us a total of 13,650, right? Okay, and then for our applied, since we have to calculate our pure R and then multiply it with our actual basis, we were told that the pure R is calculated on direct labor hour basis. So since this is for custom and global, we're given that the budgeted manufacturing overheads was, sorry, let me fix that, was 324,000, right? So we divided with 12 months since this amount was for the whole year, which is per annum. So what we're looking for here is per month. So we're gonna take that total amount and then we'll divide it with 12 months, right? And then all over 600 labor hours, which is what we were given. Oh, sorry, I didn't highlight that. So 600 labor hours were used per month. Okay, so, and then when we divide 324,000 by 12, we get 27,000 Rand divided by 600 hours, which then gives us a POR of 45 Rand. So this is 45 Rand per labor hour, right? Okay, so our POR is 45 Rand and our actual is going to be the actual number of hours, which is 273 times that 45 Rand, right? And then it will then give us an amount of 12,285 Rand for our applied manufacturing overheads. So to get the total costs, the total current cost, we're gonna add all of these three amounts, which will then give us a cost of 43,295. So the total cost for the job is going to be the opening balance, which is 0 Rand, plus the current cost, which is 43,295. So we'll get a total cost of 43,295 Rand. Okay, so we're done with A, and then B says prepare the working process. Sorry, okay, it's more or less the same thing, but then okay, working process account for customer fee. So this is the format. So working process, and then we have the debit side and the credit side. So we always have our opening balance as the first account, and then we'll have our direct material as well as direct labor, as well as our applied manufacturing overhead. So the opening balance, since here nothing was also said about the opening balance, we'll have it at 0 Rand, right? Then direct materials, here it says that 16,950 worth of material was issued to customer fee. So the amount for direct material will be 16,950. And then with direct labor, we weren't given the amount, so we had to calculate, which was we'll take the, what's this? We'll take the 249 hours times the labor recovery rate of, which then gives us our 12,450. So I hope you guys saw the calculation. And then for our applied, we weren't given, so we also have to calculate. We use the same POR of 45 Rand. So it's going to be 45 Rand times the actual hours, which is 249 hours, which will then give us 11,205, sorry, as our applied, right? Okay, so, and then we'll have to get our total, which is we add all these four amounts, and then we're going to get 40,605, right? So going back to the question, we have to know whether the job was completed or was incomplete. So in this case, we're told that the job is completed, right? So since it's completed, we'll have cost of sales on the credit side. But if it was incomplete, we are going to have a closing balance, right? So we'll take this total amount and put it here because it was complete. And then obviously giving us a total of 40,605 also for our credit side. So I hope that makes sense. Okay, and then we'll come to the last question, which says that determine the over or under applied manufacturing overhead cost. So remember with over or under applied, so the two, okay, you can use two methods to calculate it. I'll start with the T-table method. So here we're going to have our actual manufacturing overheads. So we're going to have our actual manufacturing overheads here. We know that it's electricity, depreciation on equipment, rent on the factory. So you can add all three and get your actual, or you can just add them individually. Okay. And we also have, okay, before I just show that, we are also told that there's indirect material. So your indirect material also falls under your manufacturing overheads. And we also have indirect labor wages, or indirect labor costs at 2,800. So all these five amounts, sorry, will go under your debit side of the manufacturing overheads, which is your electricity, depreciation, rent, indirect material, and indirect labor. So all these five amounts are given. No calculation was needed. And then on the credit side, we have the applied manufacturing overheads for Murphy, also applied manufacturing overheads for Zovo, right? So the amounts were calculated in both A and B. Okay, and the amounts that we have is 12,285 for Zovo and 11,205 for Murphy, right? So you can calculate both sides and see which one is it's more. And in this case, we can see that the debit side has more entries. Also the amounts, it's going to give us a bigger total, right? So you're going to add this side, and then it gave us a total of 26,816. So, okay, to get the total for these two, we're going to take the 285, sorry, plus the 11,205. Okay, sorry. So it's going to give us that. Okay, sorry about that, I don't know what happened. Oh, equals to the 2,000 plus the 11,205. Then it's going to give us a total of 23,490. So as you can see that this side is lesser. So to get our over and under, in this case, it's going to be under because it's on the credit side. Had the credit side been more, it means that the balancing figure would have to be on the debit side, meaning that it would have an over. But in this case, the balancing figure has to be on the credit side. So that means we under applied, right? So, okay. So how we then find our under applied, we're gonna take the difference of the 26. Okay, so 26,000, which is a total, minus this amount. Oh, sorry, okay, sorry about that. Okay. There we go. So to get the difference, like I said, it's that amount minus this total amount. So we get 3. Well, let me just rather do it here. So it's that minus that into. So that's the amount that we have, which is our balancing figure, as I mentioned, right? So you can add all these three amounts and they have to give you the same total. That's that. Okay, so we're done. I hope that makes sense. Oh, we can do it in this manner. So as you know, these are the manufacturing overhead amounts that we have. So we can just add all of them together to get our actual, which is then this 26,000. And then also minus the applied. So the applied, we take the total of Murphy and also the total of Ndlovu, right? Which then gives us 26,860 minus 23,490. So the amount that you then get is 3,370. So it's basically the same thing, it's just different methods. So, okay. So this is under, right? So how it makes sense to me is that I always say actual minus applied. So if I subtract the applied from the actual and then I get a negative amount, then I know that it is over applied because my applied is more than my actual. But then if I subtract the applied from the actual and then it gives me a positive amount, then I'll know that my actual is small, meaning that it's under applied. So in this case, it's a positive amount, meaning that we have under applied. Thank you. I hope that makes sense.